Hey, it's Soleil, and this is episode 136 of the Orange Pill Investor. And today I want to answer the question, what would I not sell covered calls in? And the short answer is, if I own it, I'm selling covered calls in it. But there might be some stocks that I either simply would not own, or I guess if I was just, if somebody held a gun to my head and they're like, okay, how would you sell covered calls in this? Maybe I would sell them selectively. I wouldn't sell them all the time. And so let's just take a look at a stock that my best friend from the Navy owns. And this looks amazing, right? I mean, this is up 73% in 3 months. Everybody should get a hold of some of this, right? This is fucking awesome. But what if we go out a year? I'm like, do I want to hold it this whole time? Okay, let's go up 5 years. Okay, now this is a little bit more of a distressing chart. So especially, so this is a pharmaceutical company. And I think that pharmaceutical stocks are particularly not covered call stocks. And so if I was going to hold this, I would do this selectively, and I think he's been doing something similar. So if they're about to get approved for some life-saving, amazing thing, there's going to be anticipation. And then if they clear those FDA trials, then something like this is going to happen. You know, this gap up. I think they got some approvals or whatever. And if they don't get approvals, something like this happens. Burnt. And you get completely wrecked. And so with the way that covered calls go, I mean, unless you're here and you're selecting a covered call that's like 30% upside, you're missing out on this. So this is, I mean, I guess if you're here and you're just like, oh, okay, I'm definitely holding this, I guess you could sell covered calls here, 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 but you don't know when this is going to happen. So I suppose I would just bag hold here and then wait for this pump and then start selling covered calls at 30, because I suppose that's how I would do it. But yeah, the bottom line is I just wouldn't own this stock. It doesn't fit into my covered call strategy. I guess if I had some insider trading knowledge or whatever, and I just knew, like, hey, somebody said, hey, you can buy this for $6. I know it's going to get approved, and then boom, it's going to go to 20 and 30 or whatever. Okay, cool. But otherwise, I would probably just bag hold and wait for a pump. Now, imagine bag holding for 3 or 4 frickin' years just to be able to sell some covered calls. This is why I would probably avoid pharmaceutical stocks like the plague as a covered call strategy. If you're a buy and hold person and you're like, oh, I believe in the fundamentals, these guys are doing great research, okay, that's fine, but that's not what I do. I don't really even do a whole lot of fundamentals. I have done the fundamentals research in basically 2 assets, and those are enough for me. I don't really need to diversify too much. I'm already getting a little bit overwhelmed. So for the channel, I'm trying to cover more stocks and I'm trying to cover more strategies. And so, you know, before I started kind of branching out, I had Tesla, I had MicroStrategy, and I had like one bit of Riot here. And this is the one that I trade with my son every week. He's got a couple hundred shares, I've got a couple hundred shares, and we trade it every Friday together. So it's kind of fun. But I'm like, all right, let me start the wheel so I can demonstrate how the wheel works. And then I'm like, okay, to make Tasty Trade's algorithm happy, and so I don't have such a high concentration risk in MicroStrategy. I said, all right, let me take some profits in MicroStrategy when it pumped, and I'll buy a bunch of HUT, and I'll get into Mara, and I decided not to get some Riot because for some reason they didn't want to give me a discount on my margin. So I thought that was weird. Yeah, like I'm almost paying full price. I mean, I am basically paying full price for Riot. So I did not add any more of that. But this is now taking me longer. So I was bragging previously about how I make I basically make enough. I make more than my 9 to 5 job in 30 minutes on Friday. But then this took me closer to an hour to deal with all of this crap, plus the 5K account that I have, which is finally up. So that's fun to talk about again. But so not only is this taking longer, so I mean, so my P&L is staying the same, but the time that I'm spending to earn the same amount of money is increasing. Because every time I add a new ticker here, it's one more line item I got to deal with. And I actually had a rough day on Friday, so I'm like, okay, I have to hurry up and make this video, post it early in the morning, so that if anybody wants to see it, and I mean, it's not financial advice, but if somebody wants to copy trade, you know, more power to you. It's you're a grown person, you can make your own decisions. And so I tried to record and post as early in the trading day as possible, so it would be of value to other people. But in my rush to do that, I actually forgot to roll my IRA. And so I'm only going to lose like a day of theta, you know, a day of premium here. It's not a big deal. However, if you're selling covered calls in 20, 25, what do they say? If you get to 25 different stocks, then you're diversified and you're quote unquote safe from any one stock going to hell on you. But the more things I add here, the longer it's taking me to earn the same amount of money. And in my haste, I forgot to even do my entire IRA account. So I'm not going to add tons and tons of stocks here. However, I am going to start maybe asking folks maybe once or twice a week, just, hey, what do you want me to take a look at? I know NVIDIA is all the rage right now, so maybe I'll set up a poll and see see if people want me to cover NVIDIA. Like if I owned NVIDIA, how would I trade it? Like what can I get? If I wanted to start the wheel right now, $1% would be $10, so I can get 1.8% at the money for the wheel. I mean, I guess that's okay. If I was just going to start with covered calls, 1%, I can get right about here. So I could sell the 1090 strike. So that's only about $30 of call away value. That's like what, 0.1%? Yeah, that's not much. So I could get 1% in premium, but only about, no. Yeah, 1% with 10. Okay, so 3% call away value. I don't know why I was so down on that. But I mean, to go to 10% call away value, I'd have to go to the like the 1170 strike, and you're only going to get $68 here. So that's like 0.1% would be, oh my gosh, would be $1. It's not even 0.1%. It's like 0.6 of 0.1, 0.0006 or something. So I guess if I had to, I could trade this, but it's just not for expensive stocks. It's just not MicroStrategy, that's for sure. But that's actually maybe not a fair comparison. I mean, MicroStrategy just had earnings not too long ago, but implied volatility usually collapses after earnings, so it's to be expected that covered call premium and selling premium is not going to be that great, which maybe that means it's time to buy calls, even though they're going to be way more expensive on the gap up. They're going to be somewhat of a discount based on implied volatility going down. Let me see if I can do this without NVDA. Oh, of course. Let me sign in. Let's see if this lets me. Okay. Ow. There we go. All right, so before earnings, implied volatility was 53, and now it's 39.1. So we had implied volatility collapse. Basically, it's called earnings crush. And you can see implied volatility increases, anticipation, earnings call, no more anticipation. Everybody knows. The stock either went up, the stock went down. We know what earnings was. We know everything that was said in the call. And so there's just this sigh of relief in the market, like, oh, uncertainty is gone, which is a good thing for options buyers. But if you own this and you're selling covered calls, and previously you were getting twice as much premium, and now you're like, ah, crap, I can't get much premium, this could be the cause. But at the money, for MicroStrategy, 1% would be 16. So this is like 4%, 4% at the money. It's 4 times as much premium per amount of capital allocated. Even these cheapies. Mara is one of the more expensive of the miners, but starting the wheel, you can get almost 5% at the money. Starting in Riot, you can get, this is not fair either. This is 10% at the money, but it's like 34 cents. It's actually closer to 10.50 than it is 10. So there's a little bit of, it's not call away value, but it's like reverse call away value. You would be getting a 30-cent discount on the price if the price drops from 10.30 to this. So just checking the covered call at the money is actually more like 3% because 10.34 is closer to 10.50 than it is 10. When I say Riot's not that great, let's see the one I trade, HUT. So if I was going to start the wheel and sell puts in HUT, I could get almost like 3.5%. Yeah, 3% would be $27. So 3.5% at the money for HUT. But again, the price is closer to 9 than it is 9.5. So actually pretty decent selling the covered calls as well. I know some people that I talk to like IREN, it's pumped massively. And so this is probably a viable covered call strategy at this point. But at the money, you can get, let's see, 1% of this would be 7.5. So it's like 5% at the money here, which is pretty damn good. And selling covered calls is very similar. You get like 4% at the money. So if you only wanted to collect 1% on this, I mean, you could go all the way to the 9.5 strike and build $1.60 in call away here. That's kind of ridiculous. If I was trading IREN, I would probably go here, 8.5 or 9. Collect about 2% call premium here with $1.10 in call away or 60 cents call away which 7 times 9 is 63, so it's like 8% call away and almost 3% premium. So, but here's why I avoid IREN. Not because I have anything against the company or I don't think it'll do well. If Bitcoin doubles, IREN could double. If Bitcoin triples, IREN can triple. That's definitely not out of, you know, the complete realm of possibility. But I don't like things that trade in increments of a nickel. You could probably get a fill at the mark price at 20, but what if the bid-ask spread is 15 to 20? Now the mark price is going to be 18, but you can't put in 18. You can't try to get a fill at 17. You can't walk it down to 16. You have to walk it all the way down to 15. And now you're losing $3 of an $18 premium. That's a shitload. So I kind of just call that friction. This bid-ask spread is a little bit of friction in the system. So when you're saying, oh, I can get 2.5% ROI on this, maybe not. You might only be able to get 15, which is just only 2% instead of 3%, or 2.5. So these nickel bid-ask spreads, especially on these cheap stocks, can really eat into your profits. So I avoid them. But yeah, maybe I'll do a little bit of engagement farming later, and or maybe on this post, and I'll put a little poll in there and have people vote on what stocks I should cover alongside of MicroStrategy, the miners, Tesla, and we'll see if the Nvidia hype or whatever can generate some excitement, and maybe even some regular names like what did one guy post? He said, would you want to hold Nvidia, CMG, or Celsius long term? And for some reason, at first I thought Celsius was like a shit coin, but it is actually like energy drinks or something. I got it confused with Solana, I think. No, isn't there a crypto called Celsius? Anyway, I'm glad it was not. But yeah, I'll throw some things out there. If folks want to see coverage of some things that are not MicroStrategy and Tesla, I can compare them to how I trade them against the stocks that I do like, and maybe just give my opinion on whether there's something like CRB that I would not want to have to deal with versus something like Nvidia, which is tradable, but it's not necessarily something that I would put into my portfolio. But if I had it in there and I just wanted to make sure that I kept it there, and you know, if I had it at 500 and it pumped to 1,000, I would absolutely start selling covered calls here. You know, even if I'm like, I don't want to sell covered calls here, I'm like, okay, now I'm selling covered calls because I can get twice as much premium at 1,000 as I could have gotten at 500. And hell, if my shares get called away at 1,000 or 1,100, I'm still getting a double up here. So I'll throw some polls out there, see if it gets any interest, and if it doesn't, then I'll stop doing polls. All right, so I'll leave it there. Be good, Joe.